Hello, and joining me now to discuss the week ahead in terms of global data highlights, market movers, and key technical levels to watch out for is LCG's head analyst, Brenda Kelly. Brenda, thank you for joining me. As we look at the beginning of the week, we've got a flurry of PMI data out of the Eurozone. What are the market expecting, and what kind of technical bias are we looking for in euro-dollar next week?
Well, I think if you look at the last PMI numbers, we had a bit of a mixed bag, but we did see a bit of a bounce back in October from 52 in September to 53 in 52.3, in October. So that improvement was a little bit driven by new orders, a component, but also the output component also edged a little bit higher. So we could see a continuation of that particular trend. When it comes to the individual countries themselves, certainly the fact that we've seen the euro look that much lower against the dollar should impact to the upside as well. I think overall, given what we've seen over the last number of weeks, there does seem to be a very great speculation that we're going to see an interest rate cut, possibly to negative, and of course additional quantitative easing. And of course Draghi's words earlier on Friday would indicate that that is pretty much a fait accompli. So this should all pay in quite nicely to the PMI data. On that particular note though, we are stuck in something of a range on the euro dollar around the 107 level as we speak. It does ultimately need to kind of break down through the 106.30 level if we're going to hit that target of around 105, 104.80. Otherwise, there's a possibility we could head up towards the 107.90 and possibly beyond that. So for the time being, I would be waiting to see if we break through 106.30 to maintain a bearish disposition on it.
Okay. We've got a fair bit of data coming out of Germany next week as well. This should provide, a clearer view for the market in terms of how the economy is performing as of late. What is your opinion on Germany's economic outlook at the moment?
Well, Germany's looking a little bit softer over the last number of months, certainly vis-à-vis the peripheral countries within the Eurozone, and that's not expected to change in the immediate future. The flash estimate was 0.3% Q-on-Q in their GDP, and that's probably going to be confirmed at the next juncture on Tuesday next. Similarly, their IFO business survey, again, the speculation of the further ECB actions is going to more than likely support consumer spending in Germany, and that could be reasonably robust. We can expect to see that maybe rise to 108.3 points in November. Now again, this will be somewhat bullish for the euro as well, so this does tend to negate any real downside, and you generally find at the moment that the euro acts opposite negatively correlation to the stock market, so that would be one to watch for the time being. Obviously we would like to see the DAX move higher, but we'd need a lower euro for that, but positive numbers may very well push the euro higher as well. So as I said, until we break out of this range, I'm not really inclined to get any way positioned on it.
Okay. We've got the UK autumn statement on Wednesday. So sterling and UK stocks, the FTSE will be closely watched, will they not?
Oh, absolutely. Certainly, the new government, the Conservative government, have been determined to pull back on the trade deficit. And of course, that is an issue that still is a problem. And even the numbers on Friday would indicate so. So we will hear further in the autumn statement how we're going to go about cutting back on spending. A lot of the easy cutting back on spending has already been done. So there's a bigger task ahead of the government. With that in mind, the FTSE, not necessarily all that a good indication of the UK economy. It does remain locked below 6,400 for the time being. In fact, the 6,445 level is a key Fibonacci level, and while below there is a potential for an even further rout from the current level. So as we speak, we're looking for a break below 6,300, which would target 6,250 and possibly the 6,200. Only a break through 6,445 would see us head up towards the levels we saw back in, I suppose, before August, the breakdown of around 6,600.
Okay. Any US data on your radar next week in terms of what we got out?
Well, I think if you look at what's been happening in the US, certainly the markets are well positioned now for tightening of monetary policy in December. In fact, they're about 70% sure that this is going to happen. The main data point that the Federal Reserve tend to watch rather than CPI is the personal income and spending data, and that is estimated to have risen in October, supported again by some strong employment growth and an uptick in wages as well, which we would have seen on the non-farm payroll release there. So personal spending more than likely rose, and again this will likely support the speculation that a Fed hike is imminent. But we have had a lot of Fed members speak over the last number of days, and none of them are really they're pretty much sitting on the fence to some extent, and I wouldn't put all my eggs in one basket, but certainly if you look at some of the broker reports we've seen recently, there does seem to be a big trade idea, and it's to be long dollar. It's not original, but it does seem to be working for the time being. And with that, obviously, if we do see a better than expected number from the PCE, that will be positive for the dollar. And the trade I would have against that would be the dollar yen, because of course we do have some Japanese data coming out as well on the Thursday, which would be the jobless rate and their CPI as well. Again, at the moment, the 124.40 level remains a barrier to upside for the dollar yen. We have headed that bit higher towards 125.76, but it hasn't really had a lot of conviction. So we'd look for a move through 124.41 if we're going to head back to those levels, but it will be quite a resistant area. And I know there are many expecting 145 on the dollar yen cross. I would think that's a little bit premature to think that's going to happen, but for the time being, it does seem that the Bank of Japan is rather reluctant to embark on further quantitative easing, which will obviously not be, I suppose, a useful factor when it comes to going long on the dollar yen.
Okay, brilliant. In terms of next week, is there any other key technical levels that you're looking out for? You mentioned obviously dollar yen there as well, and euro dollar. Anything else you're looking out for?
Well, if there's one thing that you need to be watching at the moment is the commodities, and certainly we've seen a massive flurry to the downside in the likes of copper, iron ore, but of course the precious metal suite also very much under pressure. As it stands, we seem to be oscillating around the 1080 mark on gold, and if we manage to close the month above that particular level, we could very well see a double bottom emerge on the gold price, which would send it back up through the 1200 per ounce mark. But the downside does tend to prevail, and any attempts to break higher have been very quickly spurned. So I would be watching for that 1080 level. If it fades, then we have 1030, and then you've got a sub level of $800 per ounce, which again is an extension, a Fibonacci extension, and could very well be a target, not necessarily in the near term, but ultimately will be something to watch for if the Federal Reserve do actually decide to go ahead and hike interest rates.
Okay, Brenda, thank you ever so much. That's LCG's head analyst there, Brenda Kelly. That's all for today's Week Ahead, but join us next week. Have a lovely weekend. Goodbye for now.